welcome to Max Estate Limited Q1 FY2025 conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing the star then 0 on a touchtone phone. Please note that this conference is being recorded. This conference call may contain forward-looking statements about the company, which are based on beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involves risks and uncertainties that are difficult to predict. And a disclaimer to this effect has been included in the financial result and investor presentation, which has been shared with you earlier and available on the stock exchange website. I now hand the conference over to Mr. Rishi Raj, Chief Operating Officer, Max Estate Limited. Thank you, and over to you, sir.
Good afternoon to all, and thank you for joining us on Max Estates Limited Q1 FY25 earnings conference call. Along with me today, we have Mr. Nitin Concall, our CFO, and Mr. Archit Goyal, Senior General Manager Finance. We also have SGA, our investor relation advisors, on the call. The presentation has been issued to the stock exchanges and uploaded on our company's website. I hope everyone had the opportunity to go through the same. Let me start with a few highlights from this quarter. We have expanded our residential footprint in Gurugram. We executed binding agreement on a joint development model for a potential group housing residential development on 18.23 acres of land with gross development value of over INR 9,000 crores. This land parcel is contiguous to 11.8 acres of land on Dwarka Expressway in Sector 36A, Gurugram, on which we did the joint development agreement last year. This is at the back of company's successful launch of first luxury residential project in NCR at Sector 128 on Greater Noida Expressway last year. It was, as you are aware, fully sold and had garnered a pre-formal launch sale of INR 1,800 crores. Over the last year, we are delighted to share that the company has collected approximately INR 458 crores for the project. We are also delighted to share that Max Estates and New York Life executed a binding agreement for New York Life to acquire 49% stake in the two SPVs holding core assets, namely Max Towers and Max House Phase 1 and Phase 2. Upon the closure of this transaction expected in this quarter, Max Estates will receive INR 388 crores, which will primarily be used for enabling further future growth. With this, New York Life will become 49% joint venture equity partner across all our commercial assets within Max Estates portfolio. We're also very happy to share that Max Estates strengthened its board by appointment of Mr. Anthony Malloy and Mr. Atul B. Lal as additional directors. Mr. Malloy is Executive Vice President and Chief Investment Officer of New York Life Insurance Company. New York Life has committed thus far INR 1,200 crores of investment with Max Estates. Mr. Lal is the Managing Director and Vice Chairman of Dixon Technologies India. Very proud to also share that to empower communities at the bottom of the pyramid, we have partnered with a leading housing non-profit organization, Habitat for Humanity India, to build 50 homes in Haryana. The groundbreaking ceremony for this project was held on 27 July 2024 in Akera village in Rewari. With that, let me share further business updates. We will start with our work well experiences. At Max Towers, total leased area continues to be 100% occupied, and the lease rental income from Max Towers stood at INR 10.2 crores in Q1 FY25. This implies 12% year-on-year growth versus Q1 FY24. Moving on to Max House Phase 1, it again continues to be 100% occupied, and the lease rental income from Max House Phase 1 stood at INR 3.5 crores in Q1 FY25. For Max House Phase 2, which is an extension of Max House Phase 1, with a larger leasable area of approximately 150,000 square foot, has been completed. Approximately 89% of the leasable area has been leased at a premium of 40 to 50% over the prevailing market rate in the micro market. The company is confident of achieving 100% leasing within the next 3 to 6 months. The lease rental income from Max House Phase 2 at INR 5.3 crores in Q1 FY25. Now moving to Max Square, which is our recent development which got completed on Greater Noida Expressway. 63% of the total leasable area has been leased, once again at a premium of 25 to 30% over the prevailing market rate in the micro market. The lease rental income from Max Square stood at INR 6.4 crores in Q1 FY25. Now coming to under development projects. First, Max Square Phase 2, Noida. The total development size of the acquired land parcel, including the completed Max Square project, will entail a mixed-use total office-led development of 1.8 million square foot. This is Max Square, which is already completed, and the Phase 2 combined together. Post receiving all approvals, the construction activities for Max Square 2 have already begun in Q1 fiscal year 25. Coming to our first commercial office development in Gurugram on main golf course extension road in Sector 65, which is on 7.15 acre land parcel with development potential of 1.6 million square foot, is just 10 minutes driving distance from Sector 56 metro station on Golf Course Road. Once again, post receiving all approval, the construction activities on this development has also started in Q1 FY25. Let me now move to our lived-in experiences. As already shared, company's first luxury residential, which we call Estate 128 in Noida, has been fully sold and had garnered a pre-formal launch sale of over INR 1,800 crores. And over last year, the company has collected INR 458 crores for the project as a part of our collection plan. The construction has begun and is on track to deliver the occupancy well within RERA promised timelines. The company signed a joint development agreement for Sector 36A, Gurugram, with development potential of 2.4 million square foot and gross development value of INR 4,000 crores. This land parcel measures 11.8 acres with direct access from Dwarka Expressway and seamless connectivity to commercial hubs of Gurugram and International Airport in Delhi. The company has worked with Kensler, a leading international architecture and design firm, to design region's first intergenerational community at scale. Post approval from RERA, the company is in the process of launching the development for sale in this month. We have entered into luxury residential portfolio by expanding through strategic joint development agreement in Gurugram with gross development value of over INR 9,000 crores. This land parcel, which measures 18.23 acres, is contiguous to existing 11.8 acres on Dwarka Expressway in Sector 36A, consolidating our position on this prime residential vector in Gurugram. Both the opportunities implies a combined gross development value potential over time of INR 13,000 crore in Gurugram, and in total it implies developing and selling an area of over 6.4 million square foot. Finally, coming to mixed-use development, enabling both work-well and live-well experiences, the Honorable NCLT, New Delhi, had approved the resolution plan of Delhi 1. It is a commercial license plot at measuring 35,000 square meter, located right at the entry of Noida. This acquisition has a potential to add 2.6 million square foot of additional development footprint to the portfolio of Max Estates. While NCLT has approved the plan, the implementation of the resolution plan is subject to receipt of requisite approval from regulatory and statutory authority, which is well in progress. Max Estates Limited is dedicated to efficient capital deployment across its asset classes, maintaining a diversified portfolio in the Delhi NCR region. The company actively explores various business models, including outright purchases and joint development. With a strong balance sheet, Max Estates strategically aims to capitalize on growth opportunities with prudent valuation. Over the years, Max Estates has remained steadfast in its commitment to creating spaces that promotes well-being, guided by our live well and work well philosophy. As we continue to expand, hospitality and design-led customer experience will continue to be central to our approach across the value chain of real estate, from choice of location to design, development, and management of the asset. Before I hand over to Nitin for update on key financials, we would like to say we are dedicated to building a progressive real estate organization focused on key pillars of execution at scale, including people, growth, capital, systems and processes, brand, and customer centricity. Over the past 12 months, we have significantly upgraded our capabilities and bandwidth, emphasizing the recruitment of top quality talent, particularly for our residential vertical. Several strategic initiatives have been undertaken to enhance our systems and processes, including digital roadmap, sustainability journey, and SOPs to enable seamless execution at scale. Our company has proven its capability in design and hospitality-led differentiation, establishing itself as a leading real estate brand that enhances quality of life through spaces it creates by bringing real well-being to real estate. With this, I hand over to our CFO, Mr. Nitin Concall, for financial updates.
Thank you, Rishi. Good afternoon, everyone. Now, let me first give you the financial highlights for the Q1 FY25. Company's first luxury residential project in Delhi NCR had been fully sold in FY24 and had garnered a pre-formal sales launch in excess of rupees 800 crores. Over the last period, we have been able to collect rupees 458 crores from the project. The consolidated revenues in the Q1 of FY25 stood at rupees 41 crores and corresponding EBITDA stood at rupees 15 crores. On the lease rental income side, combined revenues of Max Towers, Max House Phase 1 and Max Square were up by 103% year-on-year to rupees 25 crores. There was a jump of 17% in the revenues of Max Asset Services, going to rupees 8 crores in Q1 of FY25. This was on account of commissioning of Max House Block C and D and Max Square projects. I would now like to open the floor for the question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mohit Agarwal from IIFL Securities. Please go ahead.
Yeah, thanks for the opportunity. So my first question is on your targets for the fiscal year 25. In terms of the value of launches, you already mentioned about the Max 360 project getting launched this month. But if you give more color on the value of the launches and any further launches that you plan to do, and what will be the pre-sales target for this year?
Thank you, Mohit. As we have guided earlier as well, from Estate 360, which is our first residential project in Gurugram, expected to be launched in this month post-RERA approval, our guidance continues to be over INR 4,000 crores. As we have also shared that we have added another 18.23 acres in Gurugram, which will give us a pipeline for next financial years with the total pre-sale booking value potential of INR 9,000 crores. And as also guided earlier, we will continue to add to the hopper, to the pipeline, to bring 2 to 3 million square foot to the market every year.
Okay. And sir, is this entire the 9,000 crore GDV launch can be expected within FY26, or will there be phases around that?
So that we will decide closer to the launch, subject to multiple conditions. Our estimate at this point in time is to launch it over 2 years.
Okay. Sir, my second question is on the commercial portfolio. So on the Max Square leasing, the current leasing is at about 63%. Can you give a timeline around, what kind of, when do you plan to achieve that 95-100% leasing? And what kind of inquiries what kind of clients are you basically targeting, and, how has been the response so far?
Mohit, we're delighted to share that return to office phenomena across sector is back, reflected in pan-India, Delhi NCR numbers, also in our pipeline. As I mentioned, we have leased 63%. As we speak, we have very, very strong pipeline, which gives us the confidence to 100% lease it in this financial year, 2025 itself. And what is of significance, and I want to underline what is of significance, is that what we have leased and what we will continue to lease in moving forward is that significant premium to micro markets of 25 to 30%, which is already reflected in the numbers.
Okay, understood, sir. So I have a few more questions. I'll come back in the queue. Thanks a lot.
Thank you. The next question is from the line of Vikas Mistry from Moonshot Ventures. Please go ahead.
Yeah, thanks for the opportunity, Rishi. I just want to have couple of questions on Estate 360. Our channel check suggests that your GDV for 2.4 million square feet will be revised slightly upwards, because they are telling that around 19,000 per square feet is the market rate, and you are supposed to launch at that rate. So is that a right understanding, or you will be launching that in a single phase, or you will be taking 2 phases, one phase in this month and next phase maybe near Diwali?
Thank you, Vikas. In terms of your first question about the size of the GDV, at this point in time, our guidance has been over INR 4,000 crores. You are absolutely right about your reading of where the market is. and we will come back and update all of you on exact launch price and trued up GDV value number the moment we get the radar and we bring this product to the market. So that's one. Number two, we are planning to launch entire 2.4 million square foot in phase 1 itself. And what gives us additional confidence of a successful launch is this is first intergenerational residential product in Delhi NCR at scale. As we had shared with all of you earlier, 1/3 of this is dedicated to senior living, which in a way gives us a very clear two very different product segment and distribution channel and target market, which gave us the confidence to bring all of this in phase 1 in the single launch itself.
That's great to hear. I have one more follow-up on that. What is the status of EOI right now, and how it's trending towards? How much is the contribution of EOI is coming from NRI?
It's premature to answer that question. As I said, once we get the RERA approval, that's when we will formally start accepting EOIs. The only thing I can mention at this stage is we are very confident of the location, the product, and the end user experience that we are going to bring through this first launch in Gurugram, and very hopeful of successful launch like we did last year in Noida.
Thank you. The next question is from the line of Ritvik Seth. Please go ahead.
Yeah. Hi. Good evening, sir. So, couple of questions from my end. So, firstly, you have recently taken an approval from the board to raise up to 800 crores. Now, if you can elaborate on this, where will this be invested, whether residential, commercial, and what would be the timeline? Would it be imminent, or it is some time away currently? If you can throw some light on that.
Good afternoon, Ritvik. So the board and the meeting happened on 15th of July had approved a potential fundraise of up to 800 crore rupees, for which it has shareholders' approval has also been sought in the notice of the annual general meeting. The approval is expected to the AGM is planned to be happening on 23rd of August. Post the shareholders' approval, depending upon the market conditions, we would approach to do the capital raise. The validity of this approval from the shareholders stands for a year's time.
Okay, got it. Sure.
Yeah. And in terms of the end utilization, this capital which is being proposed to raise is more towards a growth capital for the future expansion in the residential and the commercial segments.
Okay, got it. This is helpful. And just one thing on the Sector 36A, have we received the approval, or we have not received the approval yet?
So on Sector 36A Estate 360, we have received all the approvals except RERA, which is in progress, expected anytime, and with that, we will launch this product this month.
Okay, sir. And we continue to stick to our guidance of acquiring 2-3 million square feet in residential and 1-2 million square feet in commercial, right?
Yeah, we have stated earlier 2 million residential, 1 million commercial. We stick to that guidance.
Okay, sir. Thank you, sir, and all the best.
Thank you so much.
Thank you. The next question is from the line of Vikas Mistry from Moonshot Ventures. Please go ahead.
Yeah, Rishi, again, just one more question that you are raising 800 crores by this means, and the kind of market situation we are looking in NCR and Gurgaon. Are you underestimating your guidance of just 2 million square feet of residential? We think that the pipeline you have and the kind of market we are in, consolidation going on, you can overshoot it by a decent margin. More than you can usually do 3-4 million square feet in residential. So, what's your take on that?
Vikas, thank you. Thank you for your continued guidance and encouragement. We all are very, very cognizant of the market, the tailwind, the context of Delhi NCR presenting us with a significant opportunity to grow and consolidate market share. From our perspective, we will leave no stone unturned to accelerate our growth. The way we are thinking about our growth is to move from here to a situation where our market share in the target premium to luxury segment is in the range of around 10%, which we believe is a reasonable target and which we also believe we are confident to deliver. So with that, we will continue to accelerate our journey and come back to all of you updating our guidance.
Oh, that's great to hear, and we hope that you come back with a more better targets. So one last question from at least my end, that you are saying that phase 2 of 36A will take at least 2 years, which means that FY26 and 27 will be that the right assumption that you will solve 9,000 of GDV on that 2 financial years.
Yeah. So if you look at our trajectory, because FY24 we did estate 128, 3 towers, 1,800 plus crores. FY25 we are expecting over 4,000 crore, as I responded to your last question, to estate 360. And the new acquisition will give us the launch pipeline for FY26 and FY27. As I also mentioned, the final plan of what proportion we launch in FY26 and FY27 will be decided closer to the date. But you're right, this acquisition has given us launch pipeline potential for FY26 and FY27.
All the best for that.
And we will be adding, as I said, more to our pipeline to further grow the launch potential in coming years.
Rishi, just a small request from at least our end, that please add the pipeline slide also. You have removed this time. Please don't remove the project pipeline slides from the investor deck.
Will do, sure. Noted.
That's all from my side.
Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Kabir from Mio Investments. Please go ahead.
Hi, good afternoon. So my question is, what is the expected revenue from Max Square and Next House Phase 2 in FY25?
So, Kabir, this is Nitin Kansal. We had given a guidance that in case of Max Square on a fully blown up basis, we are expecting a revenue coming in the range of 60 to 65 crores. And in the case of Max House Phase 2, we're expecting a revenue in the range of 25 to 28 crores.
Okay, fair enough. And second question is, any idea or colors on the company's capex plan for FY25 and 26?
So as we speak at this point of time in FY25 and FY26, we in our current the pipeline we've got 2 commercial projects, Max 65, the commercial project in Gurgaon, and another commercial project in Noida, Estate 120, Max Square as we call it, Max Square Phase 2, which are under construction, on which we are the expected deployment is in the range of 200 crore rupees. And then we've got 2 residential projects in Estate 128 and the one in Gurgaon, Estate 360, in which on actual construction we're expecting a total deployment in the range of 250 to 300 crore rupees.
All right, okay. Thank you so much. All the best.
Thank you. The next question is from the line of Sri Karthik from Investec. Please go ahead.
Hi, thanks. Hi, Sahil and Nitin. From a operational perspective, could you speak a bit about how you're preparing yourself to execute construction? Because what we're hearing is finding good contractors is proving to be difficult, especially in NCR region. So could you talk about your plans on those fronts?
Hi, this is Rishi. Great question. I think the way we have prepared ourselves is building a very solid in-house project capability. Unlike many other players, we do not outsource PMC to a third party. So we have now two distinct project execution vertical, one for commercial, another for residential, each one being headed by 20 to 25 years of real estate experience head of project, and underneath them we have built a solid projects team who can do the project management and quality control in-house. And then the way we deal with the construction is we divide the entire construction into multiple awards, and we then award it to individual vendors. And when it comes to civil and structure particularly, instead of going for a turnkey, we would like to award it to a specific player, wherein our team can then control the quality, and we also find this as an appropriate model to control the cost. So in summary, in-house project management and execution team who would then work with multiple vendors, wherein we will issue multiple awards on multiple aspects of construction, including civil and structure.
Thanks. That is very good to hear. The second question that I had was in terms of your collections. Could you speak a bit about how you are trying to ensure that there is enough skin in the game for people who are booking these apartments and ensure that there are less cancellations in the future?
Yeah, absolutely. We are doing that in a couple of ways. If you look at our payment plan, these are not back-ended payment plan. These are construction-linked payment plan, wherein right at the booking you need to pay 20 to 25%, which, if you look at our ticket size in Noida of 8 to 10 crores, or in Gurgaon, which again will be in premium and luxury segment, it is a significant amount that people have to pay upfront. That's number one. Number two, as a part of our sales process and sales approach, again to give you an example, for 128, we ensure that our team meets almost all the clients, even if they're coming through the channel network, and focuses on educating them as far as location, product, and experience promise is concerned. And through that, our endeavor is to increase the proportion of end user into our product, which again becomes very, very important way, or a critical way to ensure we are not attracting too many of investors who are looking to come in and flip quickly. And one of the evidences of that is, if you look at our estate 128, there has been zero cancellation, and our first tranche of payment is all in without any default.
Excellent. Thank you so much. All the best.
Thank you.
The next question is from the line of Rishit Shah from Rama Wealth. Please go ahead.
Yeah, hi. Good evening, sir, and thanks for the opportunity. While most of my questions have been answered, I just have one bookkeeping question. So, Putting together the two segments, that is the rental revenue, which contributes to around 25 crores, and asset services that contributes around 8 crores. So that makes up for around 33 crores of our quarterly revenue. So can you help me fill the gap of the 7 crores in the reported number and the sum of these two segments?
Yeah.
Thank you.
Yeah. Just to recollect, we had done a development in Dehradun with the name of 222 Rajpur Road, in which there was a certain section of land which was left unsold, which got consummated in the current transaction, in the current quarter. So the entire money got recognized as revenue in terms of accounting principles in the current quarter. So this 6.5 crores is towards the revenue coming from that. Post that closure of that receipts also, now that the project is completely closed. We haven't got any further receivables to come from that.
Okay, got it. Thank you so much.
Thank you. The next question is from the line of Aditi Sawant from ADM Advisors. Please go ahead.
Yeah, hi. Thank you so much for the opportunity. So I just wanted to understand that what are our plans for land acquisition for the next couple of years? You know, as we seek to add the 1 million square feet in both our segments.
Yeah. So Aditi, again, great question. Two responses to that. One, in terms of the scale and the size that we are looking at adding 2 to 3 million square foot of acquisition every year. If you look at our track record, and if you look at over last 3 years, we have added at least 10 to 11 million square foot across multiple projects, which is there in our portfolio today. And we aim to continue this trajectory of adding 2 to 3 million square foot every year. Number one. Number two, we aim to do that through a combination of outright purchase and joint development agreement to have a right balance from the perspective of getting maximum out of capital that we deploy. So those are the two things. As far as pipeline and the opportunities are concerned, we have a very strong and decent pipeline. We are evaluating multiple opportunities in Gurugram, in Noida, and also in Delhi. And we are very confident that we will be able to continue on the growth trajectory that we have done so far historically.
Okay, got it. So just last question on the debt front, what is the optimal debt we plan to have going forward?
So I think we are conservative about debt. So currently our debt is comprising of construction finance and lease rental discountings. In construction finance, we have got New York Life as a 49% shareholder in the SPVs which operate on the construction finance. But from an accounting perspective, the entire debt is reflected in the books of accounts of Max Estates. We, as a philosophy, would not like to have a debt equity ratio of more than 1. Currently, it is in the range of 0.6, 0.7.
Got it. Thank you so much, sir. That was helpful, and all the best for upcoming quarter.
Thank you. Participants who wish to ask a question may press star and 1. The next question is from the line of Neha Jain from Bagricha Securities. Please go ahead.
Yeah, hello.
Hi.
Yeah, sir, good evening. So I have 2 questions. The first one is recently, New York Life Insurance Company partnered for our existing rental projects. So why go for partnering when we in needed of extra fund or some other reasons?
Yeah. So if you look at just to step back, if you look at New York Life has committed 1,200 crore, including 23% stake in the listco, and they have participated with us as a 49% joint venture partner in the greenfield projects. The recent announcement is 49% stake in the core assets. Now, coming to answering your question, why have we partnered? For multiple reasons. I think number one, this clearly establishes New York Life as our commercial office platform partner who will continue to evaluate opportunities in future as far as commercial development opportunities are concerned, and this gives us a great source of capital in future as we expand our commercial portfolio. Number two, this particular acquisition that they have committed to will generate INR 388 crore, which, as we have guided earlier, we will redeploy in growth on the residential front, which is what we have been talking about in this call today. And number three, this also is a great evidence of our ability to churn capital through the cycle, from investment to development to leasing and lease rental discounting, and now finally bringing in a strategic investor like New York Life to acquire 49% stake in the core capital. So those are the reasons why we have done it.
Okay. And my second question is, are we seeing any challenges on land acquisition part in future? Can you highlight some update on the Delhi NCR micro market? Any plans on moving to other cities, like not in near future, but in 10 years or so?
Okay. So couple of responses to that. One, because of tailwind in residential, has the prices of land gone up? Answer is absolutely yes. Number two, are there enough and more opportunities of land acquisition? Again, answer is absolutely yes. If you look at what has happened in FY24, and if you look at the volume of land that got transacted, and if you translate that into what development potential it implies almost a development potential of 35 to 40 million square foot. And given our aspiration of 2 to 3 million, it implies a share of less than 5% that we are looking at. With our local presence, with the brand that we have, and with the track record that we have built in commercial and now in residential, we see a very, very positive response from landowners to partner with us both on outright and joint development.
Okay, thank you, sir. That answers my question.
Very confident on delivering on the target that we have taken for ourselves on the land acquisition.
Okay. Thank you, sir.
Thank you. The next question is from the line of Raj Mehta from Mehta Capital. Please go ahead.
Yeah, good afternoon, guys. My question is regarding commercial portfolio. When do we expect its full remaining potential as Max Square 2 and Max 65 projects for which construction is yet started?
So I'll give you an update on our construction timelines for Max Square 2. Max Square 2, we have started construction in Q1 FY25. We are targeting the completion of Max Square 2 in the window of July to September quarter of 2027. And following that, we have taken a of 18 months to 100% lease the asset with significant pre-leasing upfront. As far as Max 65 is concerned, this is a larger development, 1.6 million square foot. The plan is to complete this in two phases. Phase 1, as we have guided earlier, is 40% of that, which we expect to complete in a similar time frame of Max Square 2, which is July to September 2027. And the Phase 2, which is balanced 60%, will be completed somewhere around December of 2028. So that's the indication on the timeline for both the assets.
Okay. And my second question is regarding revenue and EBITDA guidance for financial year 25. Can you just put some highlight on that?
Hi, Raj. This is Nitin Kansal. So, as I mentioned earlier also, we are in the process of The board has already approved the capital raise, so we could currently refrain in giving the forward guidance on the revenue part.
Okay. Thank you. That's all my question. Good luck.
Thank you so much.
A reminder to all participants that you may press star and 1 to ask a question. The next question is from the line of Vikas Atri, an individual investor. Please go ahead.
Hello, good evening. Thanks for the opportunity. So my first question is, when are we launching the last tower in Estate 128 and what is the expected revenue?
So, Vikas, we are in the process of seeking requisite approval, and we will come back and soon update you on the timing of the launch.
Okay, thank you. And so my second question is, I see that, we'll be getting a lot of collection from the residential and commercial development in the coming years. So is there any update on the dividend distribution policy that we intend to follow?
So because currently we are in a capital intensive industry, and depending upon the requirements of fund at that particular point of time, that call will be taken by the board appropriately. We have a dividend distribution policy which has also been framed and approved by the board of directors, which is also in public domain.
Okay. Thank you so much, sir. Best of luck.
Thank you.
Thank you.
As there are no further questions from the participants, I would now like to hand the conference over to the management for their closing comments.
Thank you. I hope we have been able to answer most of your queries. We truly look forward to your participation, continued guidance and support in the coming quarters. For any further queries, please feel free to contact SGA, our investor relation advisors. Have a great day ahead. Thank you so much.
Thank you.
On behalf of Max Estate Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you.